where I bring you unusual option activity. So let me start that presentation. Here we go. Let me just make sure. I'm just going to check one thing because I've noticed and I've got some calls from some of you guys that it's a little hot. And I don't just mean the pics. I'm happy when the pics are hot. The mics were a little hot. I think I've got them toned down. We'll basically see. I'll listen to it along with you guys and try to figure it out. All right, let's go over to the presentation. I'll try not to get as excited maybe. All right, this is 3 at 3, where I bring you unusual option activity every business day, 3 p.m. Eastern Time. Let's do it. If you want to learn more about it, you can go to marketrebellion.com. That's marketrebellion.com. And you put a /UOA for unusual option activity. And guess what? You'll find all about what we're doing on unusual option activity. Now, you could also see that maybe you want to employ some strategies that you don't really understand yet. Probably not a good idea until you've had a little more education then. We've got that. We've got basic education, intermediate, advanced. We've got coaches. We've got mentors for stocks, options, futures, even crypto, which is launching this month. And wait till you see the mobile app. It is so cool. It'll be across our platform very soon, folks. So again, just go to marketrebellion.com /UOA for unusual option activity. All right, disclaimer. This just says that what I'm going to discuss with you guys now is for informational and educational purposes only. All right, so yesterday, I love it when you have something like this that comes together so quickly. You know, knock on wood, we've had a lot of these lately. I commented on it on Twitter earlier today, but here it is, and UNFI. So this particular food purveyor, take a look at that. Stock was $16.25 yesterday afternoon. And we said, you know what? Those May 15 calls, which are just in the money, somebody bought them from an out of the money call all the way to in the money. And thus those options ran from 30 cents when they were out of the money, meaning above the market in the case of calls. And let's just focus on calls for now. So it's above the market. That would mean that with the stock at probably 1470 or so, they were buying those 15 calls. They kept buying them, pushed it to 15, pushed it to 1550, pushed it up to 1625. Now, some of you might say, what do you mean pushed it up, John? How does that happen? Well, because believe it or not, most of these firms don't just fade you when you're trading options, or me when I'm trading options. Most of them are hedging. So if you're buying a lot of upside calls, and this particular trader was, if you were buying calls just like, what's the offer? Buy it. What's the offer? Buy it. What's the offer? Buy it. If you're just doing that, they're moving the price of the option up, and they're hedging themselves by buying the stock. So again, I'm talking about hedging calls. What does the market maker who sold you those calls do? They buy the stock. So the more of these calls you scramble in to buy, the higher they push the price of the stock until the stock gets to some level where either A, the option activity starts to burn out, or B, a big seller comes in and says, I'm willing to take profits here at this level. But UNFI yesterday, when I did this program, was right around this level, 1625. And those calls were right around, I think they'd faded to about $1.65 or something like that during the day. So let's see what happened today, shall we? There it is. United Natural Foods surged to nearly $24 a share. I saw plenty of trades over 23, and because it opened at about 18 and just started running, these calls, you couldn't have screwed it up, folks. This is one of those you couldn't have screwed it up. You bought those calls, you're long them at 2, you were making money immediately as soon as we're trading today. And how much? Well, take a look at that screen. You look at UNFI, what did I say it was again? United Natural Foods. You You see that? They've traded 5,500 of these calls today. That was more than they traded yesterday. The calls are up 400%, which means that from the closing price last night at $1.35, they traded up to 680 on the screen there. You see that? That's just about an hour ago. And the high of the day, if you look at that green arrow I've got on there, that's showing you they traded up over $8. So how'd you like to have calls that moved from $1.35 close last night to $8? That's why you trade options, because you guys aren't going to be able to find a lot of stocks for me that go from $1.35 to $8 in a day. Now, there are some, and a lot of them are working in the COVID space. But how about this one? This is a food purveyor, folks. And we see that unusual option activity. We follow it, and bang, worked out nicely, didn't it? Tell your friends. Now, some of you out there are thinking, well, so what is this smart money? And the reason I have this on the screen is that, here's a blackjack player, right? He's got 21, or she. But looking at those nails, I'd say it's a he. When you see blackjack players moving the odds into their favor, what are they doing? Well, they're counting cards. They're figuring out how many face cards, how many tens, if you will, are in the deck. And that will determine how much they should bet. Now, in Vegas, even these days, if they reopen Vegas, they will kick you out if they catch you counting cards. They know everybody to a certain extent does a little bit of it, but if they really see you working a system, they will ban you from that casino. It's happened to friends of mine, I know, and some of you know as well. So what do? Well, you keep an eye on stuff like this, and you move the odds into your favor. That's what I do every day. That's why we call it the smart money. So now, with that little bit of an explanation, saying, okay, well, what are those tens? What are those face cards? That's when the big money is being bet, and those are the trades we follow. So let's get to it. 3 p.m. Eastern Time. Murphy, okay, oil play, folks. Murphy, M-U-R. Let me see where we're trading right now with Murphy. Mr. Murph. See if I'm filled here on my puts, because they were buying puts in MUR, and it has fallen now. It's basically the same price as it was when this particular slide was shot about 30 minutes ago. Murphy Oil Company has bled down on the day about 8.5%. And as it has done that, we've noted a lot of put buying coming in, June puts. So here's an example of out of the money puts. So I described earlier when calls, if the stock is here and somebody's buying a call above the market like they were doing, that is an example of an out of the money call. What's an out of the money put? Well, since the stock's at 11.23, a put that's underneath that, like at $10, like this one, the June 10s, that's out of the money as well by $1.23 underneath where the stock is trading. Now, the put gives you the right to sell at that strike price. They were buying these puts from 73 cents up to $1.05. They are still trading right in that $1 range right now. And somebody who buys these puts is perhaps betting that there's another oopsie coming for the energy space, or at least for Murphy. And they did, by the way, just a week ago, report a first quarter loss, even though the revenue numbers were up. So could they perhaps have some other news that's coming out? Well, it's not the earnings, because we know the earnings aren't until, as you see on the screen, August 6th. But somebody wants puts in here, and they wanted them pretty badly, because $1 times 6,400 is $64,000 worth of puts. Why is that? Well, because every option's for 100 shares of stock. You hear that all the time here, because it's true. So $1 is $100 times 6,400. That's where I'm getting 640,000 on the total investment here. So as you see, Murphy trading roughly where it was on that last screen, roughly 1120-ish. Somebody's betting it breaks down through 10. Well, take a look at this. It doesn't really appear to have any strong support if it breaks 1050 until it gets to, just over 9. So depending how quickly Murphy would break down, this would generate a lot of profit for us because those puts, fear drives a lot of value into these puts, and boom, these things go from $1 to $2. We take our profits and move on. Let's get to the second of our 3 at 3, and that next stock is Skechers, SKX, Skechers. So Skechers, and I'm checking my fills here for Skechers, SKX. It was a $24 stock. They were buying the $26 calls. So this is another example of out of the money. They are above by about $1.30, right? 26 minus 24.70 is $1.30. So if you're right now in the stock and it was at 24, and they're betting on the stock going to 26, they paid from $1.53 to $1.90 for those. And as they did that, the earnings aren't until July 23rd, which will be after expiration. So unless they have a surprise early earnings announcement, this is not an earnings play, because there you see on the screen that we believe the estimated earnings are $7.23. Now, maybe somebody knows that they will be instead within the July option time frame. Well, we've got a lot of time because it's May right now, so we've got June, July, 2 months to figure it out. So those calls with the Skechers, basically 24.61-ish, that's where it was. They're buying those 26 calls. As you see, there's also a gap from roughly 25.50 up to 26. And if we get into that, could be one of the reasons that we go higher for Skechers. And they're buying it on a pretty significant dip today. Last one, our 3 at 3 is TJX. This is TJ Maxx and Marshalls and Home Goods and a whole bunch of these kinds of stores. TJX trading at 45.29. Somebody bought 5,000 calls above the market. And you guys know what that means now. Stock's 45.30 and they're buying the 47.50 calls. So these are roughly $2 above where the stock's trading right now. They bought them in one print for $1.70. So $1.70 times 5,000 of these, that's $170 times 5,000. That's a nice chunk of change. It's a $900,000 trade. I want to follow people that make $900,000 bets. I don't necessarily want to follow people that are making $20 and $50 bets, but you do see those out there too. We're here to follow the smart money. And in this case, TJX, June 47.50 calls. Earnings are going to be this next week in May, next Thursday, if that's right. 5:21 it says, before the opening. So let's see what the graph looks like. Here's the graph. Another one where we're picking the stock up after a sell-off here, not just chasing momentum. Stock was $49 this week. It has collapsed down here to $44. Might not be a bad time to put on a little trade in here, huh? Well, that's what they're doing. They're buying those 47.50 calls, betting maybe that we see a pop into next week. And if we do, then these people will be rewarded for buying these calls. I am Jon Najarian. You want more information about Market Rebellion? Well, you can just go to marketrebellion.com. Or if you want to learn about education, coaching, mentoring for stock, options, futures, technical analysis, even cryptocurrencies, you can get all of it at marketrebellion.com. Just check out marketrebellion.com for this specific information of the sort that I've showed you today. You can go to marketrebellion.com/UOA for unusual option activity. Hey, folks, thank you for joining me. I hope you have a great afternoon. I'll be on the halftime report tomorrow, noon Eastern time. Have a great night. Thank you.